Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Sean Krakiwsky, the CEO, and Luke Covet, the CFO of Nanalysis Scientific. Nanalysis trades on the TSX Venture under the symbol NSCI and on the OTC under NSCI-F. The company is trading at $1.04 with roughly 67 million shares outstanding, or about a $70 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. Yeah, super happy to have Sean back with us today. Sean and I go back a fair ways. We've known each other for a little while, and I've known the company for a little while. We've also did the original interview, I'd say about 6 or 7 months ago. Lots has happened since then. We're happy to have Sean back to both sort of give everybody, a general idea of what Nanalysis does, but also to give us an update for those that know the story well. So Sean, I'm going to hand it over to you, and I'll just let you go ahead with your presentation.
Thanks very much, Paul. It's great to be here. Thanks again for the opportunity. And so I think a lot of the people on this call have heard our story before, so I'm going to give an abbreviated presentation, but I'll just say that, yeah, we're disrupting the MRI space. So most of you have probably had frustrations with, getting your doctor to get you an MRI on your knee or your ankle or whatever the case may be. And, we're going to change all that. Along the way, we're going to be, we are selling our products to pharmaceutical companies and food companies and universities and so on and so forth. But the vision is to sort of break up the Siemens, GE, Philips cartel and be involved in next generation personalized healthcare so that you can get an MRI anytime you want on any part of your body, have it connected to the cloud and driven by AI and your next generation healthcare provider. So we do seek safe harbor. So our initial foray into this space is to miniaturize the versions of MRI machines that are more commonly known as nuclear magnetic resonance spectrometers, most important analytical technique on the market, used in all industries, and you can determine how much of a particular molecule is in any substance, and then there's downsides to those large machines, and we've miniaturized them successfully and have been shipping products to customers for years. And as one of my business partners told me, if we can miniaturize those, we can also miniaturize MRI machines. From the perspective of the fundamental math and physics, they're the same thing. We're quite active in the MRI space on the technology side right now, even if we're not fully active in terms of the human diagnostic side of the business, but that's coming. You can see public announcements on this front that we've made recently, and we are generating revenue in the actual imaging space today, and over time you'll see more of that. So we view our opportunity as a huge market opportunity. It's in the test and measurement space, whether it's MRI machines or whether it's for human beings or whether it's food. Over $75 billion per year is spent, and it's growing. And we think miniaturization and new applications and AI and the cloud are going to continue this growth well into the future. Here's a look at some of the customers we sell to. We sell all over the world, in the United States and markets like that. We sell direct with our own sales force, which is of about 10 people. And then in international markets, we sell through a network of distributors. Here's a look at the products. Right now, it's sort of a greenfield opportunity, hardware play with high gross margins over 65%. But in the future, there's going to be a consumable side of the business and a software as a service side of the business as well. All of our technology is proprietary and patented. Our growth strategy is to combine our innovation. We will always innovate. We will always be producing new products and establishing partnerships to sell those, whether it's on an OEM basis or a value-added basis. And then we're executing an M&A strategy. So we've publicly announced the closure of our first acquisition. Others are imminent, and that is an important part of our story going forward, all within magnetic resonance. So laser focused on magnetic resonance, but complementary companies on that side. And we're going to be all about making this data easier to understand, not just by experts, but by normal human beings, technicians, and so on and so forth. Fabulous management team, fabulous independent board of directors. We're really proud about the loyal shareholders that we've had that have been with us for 11 years and are sticking by us and keep telling me every single day, Sean, we want to put more money into this business, and we're excited to see you keep growing. So you combine that loyal shareholder base with some great new investors that have gotten on board recently, and you end up with a stock price that's looking pretty good recently. So we're really confident about our fundamentals, not just in 2021, but also in 2022 and 2023. And so, you know, I know we've had a bit of an uptick and people are getting excited. I still think we're way undervalued. And so I think, you know, if you look at our quarterly financials in the next little while, I suspect you'll probably agree with me. So that's just a refresher, other than to emphasize that our people are fabulous. They're all shareholders in the company, and they're extremely well motivated to make us successful going forward. So hopefully that gives you a little bit to chew on, Paul, and happy to answer any questions or engage in any kind of discussion.
Sure. Why don't we let's go back to sort of your core product and kind of what it does. I know you had it, you mentioned it there, but really you're taking a very large sort of machine, or traditionally a large machine, that would sort of molecularly, or you sort of understand what the molecular makeup is of a product. Right, and you've given me examples in the past. Why don't you give some more examples? Why would a customer need your product, and what makes it so different, having shrunk it down to the size it is?
Right. So, for example, if you're taking possession of like a $10 million commodity trade of jet fuel, and before you pay for it, you want to make sure it is high quality jet fuel. Well, in our industry, it's commonly known that nuclear magnetic resonance is the best way to test that jet fuel for quality. That's never been a question. The question has come associated with the fact that it's a gigantic machine that requires liquid helium to keep the magnets cool. You can't move it around. So in other words, it's not available at the point of need. But if you can do the same thing with something that is the size of a toaster, and that you can drive around in a truck, well, then you can test your jet fuel anywhere, or your olive oil anywhere, or your cannabis oil or your cannabis product anywhere. So we've taken the gold standard that people have known for 20 years as the best way to analyze substances, and we've just miniaturized it. And we've done it in a way that's the best in the world. And so what's really exciting about this is that's generating revenue for us right now, explosive revenue growth. And we've demonstrated profitability with that product and with closely related products. And one day we're going to do the same thing for MRI machines. So, and it's easily validatable to show that miniaturizing NMR spectrometers and miniaturizing MRI machines involves the same thing. And we already have the technology platform. Last year, we generated $2 million in revenue associated with MRI machines through OEM customers like Mediso and through direct customers in China. So, you know, we really just think this is an exciting story with a great vision, a great medium term, and as you'll continue to see, a great short term.
So let's talk a little bit more about the MRI side, because this is relatively new. I mean, that wasn't part of the strategy, I think, the last time I spoke to you. Clearly, everybody understands the demand and need for MRI machines, but how do you get there? What do you guys still have to do to be able to really penetrate that market?
Right. So the first thing to emphasize is the technology capability is the same. I guess the reason why I haven't talked about that a lot in the past is because a lot of that capability to talk about it came through our first acquisition, a company called RS2D in Strasbourg. The founder of that company had a vision to build an electronics platform that was usable by NMR customers and MRI customers, and he was succeeding at that. Brilliant scientist, technology guy, just not very good at raising money and stuff like that. So we acquired him, and he's still with us. He's our executive VP of sales. We fixed our company, and we're expanding that part of the business. And the electronics platform that we've acquired is common across all of our products. Where we came from is the most difficult part of the problem is not the electronics. The most difficult part of the problem is the magnet system. So that's where we focused in all of our energy and all of our money at the beginning. We did the electronics part, but we kind of neglected it a little bit. So we were world-class on the magnet side, but not world-class on the electronic side. But that came to us through our first acquisition in RS2D, and they were connected to the MRI space. So that's why I've been able to talk a lot more about the MRI part of the business, over the last few quarters, compared to, say, like 2.5 years ago when I first met you, or in other conversations along the way. And we'll continue to talk more about that. If you look through our press releases, we have a press release that we called Gamma MRI, where we won a competitive European bid, and our part of it was about $1.3 million. It's all about detecting smaller tumors earlier. So what most civilians don't understand is that the technology in MRI machines that's deployed in hospitals today is extremely primitive, and it doesn't represent the state of the art that's actually available through science and technology. And the reason for that is because the cartels and the regulatory environment, although they were good for the early days of MRI, they eventually, like all cartels do, they eventually stifled innovation. A specific example of how the cartel has created myths that aren't true is that most people think you can't do bone scans with an MRI machine. It's totally untrue. You can do bone scans with MRI. Most people are told you have to get a CT scan or an X-ray if you want to look at your bones. Not true. And of course, MRI machines, just like NMR spectrometers, are no-dose devices. In other words, they don't bombard your skin, your human tissue or the sample with any particles. It's dose-free. It's perfectly safe. Whereas CT scans and X-rays, are cancer-causing things, and they bombard the atoms in your body with particles, and it's unsafe. So the future is to get away from that sort of thing for things like bone scans and go more towards MRIs, but it can't be a pain in the ass to do it. You have to be able to just go get one, right? And so we're going to be all about that going forward.
Amazing, interesting. Now, you guys, I remember the 100 megahertz was the new product that you guys were launching. You've clearly demonstrated commercial sales in that. Maybe give us a sense of, what's it been like launching the new product, and how successful have you guys been?
Yeah, the demand from the market has been awesome, and it was a product that we created based on several years of market feedback on our first product, mostly from pharmaceutical companies who said they love the product concept of the 60. They love the fact that they could move it around, that it didn't require liquid helium, but they needed more performance. So, sometimes when a company is designing a new drug, they might spend $100 million on it, but they only have like micrograms of a precious compound. And so there's not very much sample to emit a strong signal. So we developed a product that is more sensitive and has more performance. And the market has conveyed to us that they're willing to pay for that extra performance. So we're seeing a tremendous uptake of that. I was a little disappointed, if we're going to be sort of honest critiques of ourselves, about how long it took us to start shipping, but very difficult problem. Some large companies have tried to build competing products and absolutely failed. So I'm kind of giving our R&D department the benefit of the doubt there. They succeeded at it, even though they were, maybe 2 or 3 quarters late, but it's shipping commercially, and manufacturing has taken over production of it. And we're really excited about that product providing really great growth this fiscal year and next as well.
You've got a slide up right now that shows a number of different products. What other products are you most excited about rolling out here?
Yeah, in terms of like the next few quarters, the 100 megahertz is the big one. The Pulse Console there is a product that has the same electronics core as the 100 megahertz, but it's in a different configuration. And we made an announcement in December about a partnership with a company that we didn't disclose the name of because they're still in stealth mode. They paid us $1 million Canadian approximately upfront. And then there's OEM revenue associated with that relationship with this particular product, the Pulse Console. And I can't disclose what type of product it's going to go into, but it's being bundled into a larger system that has several modules to it that will sell for approximately 500,000 euros. And the reason why we can't, it will be disclosed probably in 3, 4, 5 months, but I can't disclose it now because of very serious competitive implications. So we kind of don't want it to get out, but some very large companies that have been involved with us in the past will consider that a sort of a serious threat. So we're trying to keep that in sort of stealth mode as long as we can. So we're really excited about that as well. And then, although it's not on this particular slide, we're really excited about acquisitions that we have in our pipeline. A very imminent one, and then one that I'd like to close before the end of 2021. And so the accretive nature of those acquisitions, we can usually buy these types of companies for around 1 times trailing 12-month revenue. We do a paper swap, so the dream is still alive, and then work together side by side with that entrepreneur and fix the things that are a little bit broken in the company, and then kind of double the revenue right away and provide more growth for us going forward. So I guess that's kind of what I'm really excited about right now, and I'm also just excited about ramping up our IR activity as well, which we kind of let go for a few quarters during COVID.
I certainly want to talk a little bit more about the IR side, but let's get back to the M&A a little bit. So you touched on something. As far as your business right now, where do you what direction do you go for M&A? Are you looking for new technologies? Are you looking for businesses with certain kinds of relationships? Or more of what you guys have? What exactly are the areas you're going to look for in M&A?
For sure. And I know you know this, Paul, because we've talked about it, but for your audience, I want to also just explicitly state that we're not doing a roll-up. It's not a roll-up of like companies and then sort of exploiting cost synergies or something boring like that. It's complementary companies. So, I've kind of alluded to the fact that, one day we're going to have recurring revenue from software as a service. So you'll see acquisitions that are pure software companies joining what I like to call when I'm having beers with these guys, when they're joining our consortium. And so you'll see pure software companies come into play that involve AI and deep learning that have to do with more sophisticated analysis of substances. as well as more sophisticated data processing associated with images and MRI machines. So you'll see that. You'll see companies that have a hardware product that's related to our NMR spectrometers, but are referred to as, and again, sorry for the technical word here, but referred to as NMR relaxometers that tend to be used more with solid things like polyethylene pellets, which is a huge industry in the world, and that have succeeded at sort of penetrating a very specific vertical market, but totally failed at building out their technology platform and lost their ability to build new products and stay current on the product side. So we'll buy these companies that have a deep vertical market focus that at one time had sort of an okay hardware product that is very similar to our 60 megahertz product, but is different. We'll take over the next gen development of that product. We'll take advantage of their vertical market penetration and their huge customer installed base, and fix that business, double their revenue right away, and then they'll become part of our overall company. And so, there's growing number of companies in our pipeline. We prioritize them in a way that's kind of flexible. So we're not locked into only one path that we have to take. And that gives us some flexibility in how we negotiate with these companies. Like, hey, if you don't want to do a win-win deal, well, then we'll go a little bit in a slightly different direction. But yeah, and there's other ones as well that are like pure MRI companies, pure MRI hardware companies that are part of our short-term M&A pipeline as well. What's common about all these companies is they haven't really taken off. They have brilliant founder scientists at their helm. They've kind of beaten their heads up against the wall for 15 years because, some professor or whatever figures he's going to grow a business, but then he's scared to raise money, and you know how that goes. And they're ready to sort of join forces, like, take their private co paper, swap it for public company paper with an organization that has infrastructure, world-class R&D, world-class manufacturing, HR, corporate finance, the whole thing. And motivated by really taking on some of the big boys that we're all in this for business, but there is a personal slant to some of these things as well, where we're joining forces and want to sort of prove something to the world, to our industry anyway, and with a little bit of a chip on their shoulder. So that's what all these companies have in common. They're all companies that I know, that I have relationships with, that I've been talking to for 10 years. So we're not, hiring an M&A firm and doing a search or something silly like that.
Gotcha. And do you feel you have the balance sheet and the sort of the girth as a public company right now to be able to continue doing these acquisitions? Or do you have to go back to the market and raise money?
We're not going to back to the market to raise money at these stock prices, because we think we're significantly undervalued, and we have a very strong balance sheet right now. So, we haven't, it's not like we're one of these tech companies that's just been burning boatloads of cash. No, in fact, we've proven the profitable nature of our business. So very strong balance sheet right now. But, just to throw out a hypothetical scenario at you, if you saw our stock price double in the next little while, yeah, we probably would do a raise at that price and accelerate our M&A strategy, but we wouldn't use it for current. We wouldn't do a raise for current operations right now. We don't need to.
Mm-hmm. Pivot a little bit. Obviously, the last year has been pretty tumultuous. COVID has, I know you as a road warrior. I mean, literally, I met you in, I think it was Zurich or Geneva one time while we were passing. So you travel a lot, but obviously that's changed over the last year and a half. How has COVID affected your business, and how do you think it affects your opportunities going forward?
It did sort of slow us down a little bit. Not enough to want us to pivot or anything. We totally stayed the course. We basically just hunkered down, and it it slowed. One area where it did slow down our progress is sort of in the area of third-party partnerships. So, you know, for example, on this one project, we had to conduct a real test on a cargo ship, and because of COVID, we haven't been able to book time on that actual cargo ship. So there's an example of some ways in which it slowed us down. But my sales department, about 3 months ago, started to tell me that from their perspective, things have started to change. You know, like and you know, that showed up in our order book with you know, customers that maybe had gone dark on them for a little bit, come back to life, and so we kind of feel like we're on the other side of that. And so if we are great, then things will be absolutely fabulous. If there is a, you know, a fourth wave or something like that, then we'll just do what we did before. We'll hunker down. We'll maintain a strong balance sheet, and we'll get through that aspect of it as well. There's a good chance that in some news that's coming out in the near future, you will see us use language whereby we get more exposure to sort of virology and biology and that side of things. So I wouldn't necessarily call that a pivot, but I would call it a, you know, okay, well, you know, if this type of, you know, pandemic environment is going to be something that sticks with us for a longer period of time, then we better start to get exposure to that industry more. So our one of the acquisitions that is in play here has to do with that, and so we'll continue to go in that direction if that's the way the world goes.
Mm-hmm. I mean, you're obviously hardware, electronics, all sorts of components. Do you see any issues with just getting access to products and material? I mean, there's a lot of, we're hearing a lot of issues with delays in products and subcomponents. Are you facing any of that?
We face uncertainty associated with shipping times quite a while ago, but in terms of the sort of recent delays that have been on the news, the popular media, you know, in the automotive industry and so on, no, we didn't experience that. But about a year ago, we did sort of start to get spooked a little bit, and our CFO made the wise decision to start buying up some inventory, so that if something did happen, then we would still be able to ship product to customers. So that was good. And again, because we've maintained a strong balance sheet, we've been able to do that. And so we'll continue to sort of assess the situation, you know, in our discussions with our supply chain. And we do have quite a few, you know, vendors, that's for sure. You know, one aspect of our business is I always wanted to control our own destiny. And so we took on a lot of extra burdens to do that. And those burdens are paying off now. And as long as our gross margins stay healthy, we're going to continue to do that.
Okay, earlier you mentioned IR. The stock's had a really good run in the last sort of 30 days. What's changed in the last 30 days, and what if anything are you guys doing differently with IR or the same? What's caused the meteoric rise in share price over the last 30 days?
Improved confidence in our fundamentals, and then we've started to do investor presentations again, whereas I kind of took a hiatus from that for quite a while. And then recently we've had some success with mostly American investors who have started to take some big positions in our company. And so those two things combined, I believe, are responsible for the increase in our stock price.
I should have asked this earlier. You did mention, you know, a total addressable market for your products, but you really included sort of the big products as well that are out there. But more specific to the offerings you guys have, what do you think is a reasonable sort of 5-year goal in terms of revenue for you guys?
Right. So on your point about the total addressable market, I think you're right. I mean, the space that we're in, the test and measurement space, is a huge space. The addressable market for us right now where we can actually compete with customers today is about $3 billion per year. But we think our total addressable market is going to grow significantly into this larger test and measurement space. In terms of our actual revenue, I think we got a couple of years of 100% revenue growth ahead of us. That's my opinion. You know, we have quite good visibility into 2022. I mean, our visibility into 2021 is awesome, obviously, and then very good visibility into 2022. So I think you can see a revenue, you know, double from 2021 to 2022, again from 2022 to 2023. So that, you know, that's going to take us to somewhere around 80 million. And then depending on what path we go from there, we could see even more explosive revenue growth than that after that if we're more entrenched into the MRI space. Or we could experience a couple of years on a sort of a classic kind of economic S curve where we, you know, maybe do a paltry 30 or 40% revenue growth in 2024 and 2025. So we'll know better on where we're going to be on that trajectory in about 12 months. But you know, my objective is to get our company to $100 million a year in revenue as fast as possible, and that's why we're combining not just organic growth but also M&A as well.
Mm-hmm. Perfect. As investors, I guess two-part question here. As investors, what sort of metrics should we really be focusing in on to be clear that you guys are executing? And then I guess sort of over the next, call it 6 months, what sort of catalyst should we be watching for as well? What should we be watching for?
So I think, you know, we're at a stage where, you know, we think we're going to have quite impressive quarterly revenue numbers. So we're not one of these pre-revenue companies that's saying don't look at our revenue or whatever. I mean, we are still managing for top line growth. So on the profitability side, you know, I don't think sort of, you know, bottom line like after tax net income is a big thing you should look for. But I think the EBITDA numbers are something that you should watch. And, you know, of course, top line growth, as I've said. And then you should just see that we're consistently making announcements associated with partnerships and the M&A side of it. I mean, I think, assuming we're not talking about anything to do with IR or anything, just our business, I think the biggest thing is going to be, in terms of catalysts, is going to be the acquisitions that we announce. And, you know, most investors that I talk to say that for a company that's relatively small, and of course we are a tiny company, that, you know, what we've demonstrated so far in terms of being able to do accretive acquisitions and make them like real and fully integrated into our business is quite impressive. So we think that that's going to continue, and we think it's something that makes us sort of unique. In other words, not a big cannabis company doing a roll up or something, but actually sort of combining innovation and M&A together in a way that's very synergistic.
Sean, what keeps you up at night?
Well, nothing to do with our business, nothing to do with my business, but my daughters have turned into total radicals, and they've got me talking about things like we need to get rid of carbon in our planet and stuff like that. So I used to be a little bit of a skeptic, but now I'm sort of a convert, and I'm sort of saying, what the hell, let's do it. And that actually, I hope you don't mind, there's another great company out there called Accelaware that's about converting the Alberta hydrocarbon production infrastructure into an infrastructure that's going to do pure hydrogen. So they're going to leave the carbon in the ground, they're going to pull out pure hydrogen, and then they're going to convert the trillions of dollars of infrastructure. And instead of becoming like a global pariah, economic pariah, we're going to become a paragon of environmental production of pure hydrogen to power electricity facilities and to use in hydrogen fuel cells where electricity, like electric vehicles, isn't possible. So our planet is keeping me awake at night, and it's because of my daughters that are turning into me some sort of environmental freak, I guess. But anyway, that's my answer.
I don't think we've ever had that answer is what's keeping us CEO up at night, but appreciate it for sure. Listen, we sort of come to the end here, Sean. Is there any sort of key takeaways or any, key messages you want our listeners to walk away with today?
Yeah, I mean, if you're, I'm assuming some of you are already supporters in our company, but a lot of you probably are not. And so if you're looking to get involved in a company that's going to have, a tremendous impact on our world through disrupting what's going on with MRI machines right now, and you want to join a team of people who have stuck together for 11 years, and I'm talking about initial scientists, other management, board, angel investors who are still with us, and you want to help us get to where we want to be, then please buy our stock and give me a call anytime. Happy to talk to you about any subject.
Perfect. And if somebody wants more information, what's your website address?
www.nanalysis.com. Nanalysis is like the word analysis, but with an N in the front. N for nano or N for NMR.
There you go. Perfect. This is great, Sean. It's always great to catch up. Congratulations. You certainly, you guys are managing to not just weather, some trying times, but absolutely grow a very unique product within a unique opportunities. I think that has tremendous upside. So congratulations on all the work you guys have done so far. And listen, we'd love to catch up, at a later date and see how things are going.
Fabulous. Thanks very much, Paul. Really appreciate the opportunity.
Thanks so much.